Welcome in our guest on the program, and we'll have Jeffrey Dennis joining in, independent emerging markets commentator. Jeffrey, great to have you with us here. Thank you very much for your time. Appreciate it. We're sort of getting closer and closer to U.S. elections, and I want to just kick off with that because everything else seems a bit stale because it's more of the same in that sense. Where are we at, especially in some of the swing states as we get closer to U.S. elections? Is there a definitive kind of trend, or is it, are polls indicating that both are in a dead heat? What's your sense?
First of all, as I was preparing some thoughts and some notes for the interview, it just occurred to me that not much has really changed, I think, in the markets over the last couple of weeks or so. So let's focus on the politics for a moment. Clearly, Kamala Harris and the Democrats have had a very, very big a surge in the polls since she took over the nomination from President Biden. But there seems to be some evidence she's topping out a little bit now, looking for maybe a further bounce eventually coming out of the convention. But it's we're not seeing much of that so far. But I think what's happening, and this is not something I'm doing myself in terms of independent work. She does look as if she's ahead in nearly all of these swing states. Possible exceptions would be Pennsylvania, for example, possibly Georgia, where she's not necessarily ahead. But I think the interesting thing, and what's going to make it very uncertain for a long period of time still until the actual election itself, is all of these leads that she might have, and indeed the leads that Trump may have in one or two swing states, are very narrow. They're basically close to the margin of error. So there's still everything to play for, but the Democrats' position is, of course, better than it was a month ago, and that's particularly true in these swing states.
Hi, Mr. Dennis. Great to have you on the show. And along with, of course, all the politics, we'll continue tracking how markets react to the rate cuts as and when they finally start. We're finally entering the month of September now. What is your sense? Do you think we'll get just gradual 25 basis points? And if that's the case, will that keep markets in an upbeat mood? Or will markets sort of start getting into a range unless and until we see a big bazooka, something like a 50 basis points from the Fed?
Well, I think there's no need for a big bazooka now. Frankly, I thought we might get an intermeeting cut. I thought we might get 50 basis points. Now I think it's most likely to be 25. Of course, the payroll numbers are coming out later this week, and if they're on the weak side, I suppose it does increase the risk that could move by 50. But the data are still reasonably stable and steady and pointing towards, I think, the fabled soft landing. So for me, it looks like most likely a slight balance towards just a 25 basis point cut. And I think then they'll probably cut again in early November around Election Day, and then again in December. So I think we'll be at 75 basis points of cuts by the end of the year, and then we'll take a look at 2025 to see how much further that may go. But so that's my sense. I don't rule out a 50 basis point cut. It would be interesting to do a big cut at the beginning, but I don't think the macroeconomic data warrants it now. I think the Fed may rather keep their powder dry and just cut by 25 and follow up by further 25 basis point cuts as we head towards the end of the year. But the most important data point to confirm that or not will be these payroll numbers on Friday.
Hi, Jeff. Morning. Good to see you, Ben. Let's talk about equity markets then. With regard to those cuts, some part of the street believes maybe 100 basis points would come. So let's see how that goes. But let's focus on global equity markets. How do you approach it from here on? Given that we're going to be getting a rate cut, will you be leaning more towards the DMs or EMs? And within the EMs, where is India placed?
Well, the EM continues to be quite disappointing, I think, overall compared to DM this year. We're still trading about a 700 to 800 basis point lag against developed markets. And that's got a lot to do with the very poor performance of China. In relative terms, China's just up 2% in dollar terms this year as of Friday. And I think China really needs to break out more to the upside for the emerging markets to really catch up the developed markets. I don't see any reason why, if we see steady rate cuts and more soft landing type of data, why the US equity market shouldn't continue to move higher, albeit I'm sure very erratically. It won't be a sharp move up to the end of the year, but I think it'll be an upside move. And I think yen will probably also go up between now and the end of the year. A lot of that, as we've discussed on this program before, will depend on whether the dollar starts to go down again. Now, within emerging markets themselves, I still think India is a great place to be for the long term. Of course, we've said it before, there are concerns about valuation levels, of course. Nice piece in the Financial Times the other day about the slowdown in FII inflows in the month of August, which is no surprise given the volatility. But I still think EM investors really, really want to believe the Indian story, want to see it moving higher and are probably positioned for that. Outside of that, I still like Taiwan. I think Brazil and Mexico are two markets that will benefit tremendously as the dollar goes down, with the scope there for lower interest rates as there's less pressure on currencies. And selective other markets, perhaps some of the ASEAN markets, Indonesia, etc., and also Central Europe. I would not be chasing China here. I think we've got to see a better economic performance from China before that market's really going to recover. So for me, a switch from India into China doesn't make a lot of sense, frankly, right now.
All right, got that, Mr. Dennis. Yes, the weekend numbers out of China as well on the manufacturing side, not pointing to any sort of a recovery. I think those numbers are still in contraction territory. Thank you so much for joining in and giving us some perspective. I wish you a good rest of the day. Well, with